So Black Earth farming is listed on the Stockholm Stock Exchange. It was formed in 2006, primarily as a land investment vehicle, and the farming came later. It's located in the central soil black regions of Russia and is mainly black Chernozem soil. Our total land holding is 271,000 hectares, which I'm unreliably informed is the size of Luxembourg. 230,000 is owned, the balance is leased, but is in the process of being taken into ownership. There is a continual rationalization to create more ring-fence units and to improve land quality overall. Our average field size is 100 hectares, that's 250 acres, and the biggest is 950 hectares, which is 2,300 acres. We've had to turn around the core business, and it was a 5-year program, of which we're just about to enter into our 4th year. A lot of the soil needed repairing from years of neglect and compaction, some of it going back as far as the Soviet era. So we've had a program over the last 4 years of deep soil subcultivations and also applying lime to improve the pH levels. We've made rotational changes. We now have a higher annual fallow to allow a better entry for wheat, because that's an issue for the crops following rape, soya, and certainly for sunflowers and corn. We don't normally finish our corn harvest till the end of November. So we've invested very heavily in a logistics system, and we use Cropio, which tracks all vehicles and field operations. We have every field mapped electronically, and we can see in real time all field operations at any time, and the department is manned 24 hours a day, 7 days a week. One of our mainstays is exports. This allows us to lock in a forward price, as the Russian market is spot to 1 month forward, and certainly very difficult to price any new crop per grain before harvest. Just to recap our strategy, we have contract growing, let's say PepsiCo for potatoes and hyaluronic sunflower seeds, malting barley for domestic brewers. Wheat, we contract to one of Spain's largest millers. So the benefits are domestic price risk management, high quality counterparties, diversion into higher value crops, in PepsiCo's case vegetables, and significant potential returns on capital. So growth in stock to use ratios, which are all higher, some 30% higher for soya alone, but these figures hide the growth in stocks of feed grains. The 2014 harvest was notable for wheat quality issues, the US and EU specifically, so increased feed wheat plus corn, again higher crops worldwide, show a very big rise in available feed supply. Perhaps in part accounts for the recovery in quality wheat premiums recently and bearish outlook for corn. Can we expect continued growth in the future to keep pace with rising stocks? Perhaps not. The Chinese economy, as we heard earlier, is less buoyant than in the last few years of spectacular growth, although animal feed demand in the rest of the world is growing as livestock numbers improve, especially in Russia. So agricultural production, following a very good autumn last year, also the spring was very, very kind to the crops. Russia has produced a crop in excess of 100 million tons for the first time in 5 years, and the second time only since the end of the Soviet Union. So why has production staged such a revival? Final abandonment of the old Soviet agricultural principles of high land use, low input and output, inefficiencies, doing it by the book, high unemployment, in part certainly, and aided by foreign and Russian investors. The big growth is seen now in vertically integrated companies, and it's not unusual for a meat processor to be farming 400,000 or 500,000 hectares, certainly in our region. But the biggest influence, of course, as it is everywhere, is the climate. Certainly reasonable yields and prices over the last 5 years have encouraged development in agriculture, and the pull of land prices from the period 5 years ago, when the world looked as though it couldn't feed itself and land was very sexy. These elements have supported agriculture, but perhaps one of the biggest influence is the adoption of principle of farming less area but farming it better, and largely, of course, without subsidy. And, of course, without a drought, as we saw in 2010, we can expect that these sort of crop sizes can continue. So just a brief part on the market development. With the bigger wheat crop, protein levels are slightly lower than normal, but over 65% in Russia still falls into the milling grades. and of course low moistures associated with a very dry harvest. Kg weights were good, Hagberg and gluten levels, and in the malting barley, probably a record amount of the crop made the grade. Low proteins and high yields were the feature of this year's barley crop, which I've said, which will probably come in at just over 20 million tonnes. Screening levels were on the high side in some of the regions where the spring was very dry and summer's rains too late, but still managed to produce a well above trend yields. Our average was 3.6 tonnes a hectare, which made us reconsider our earlier decision to reduce our barley area substantially in 2015. Exports to date have been high, some months setting record levels, and with initial fears of poorer EU quality and uncompetitive prices in the US at the start of the season, Russia has maximised the opportunity, and the July-February export volume stands at about 23 million tonnes, of which wheat is 19, barley is a more modest 3.5 million, but will probably end up near 4.5 million, and there is good export demand for feed also. In an attempt to cool inflation caused by sharply devaluing ruble, the government has introduced a wheat levy of minimum $40 a tonne from the 1st of February, and the possibility remains to increase the levy and introduce one for barley and corn. This is currently under review, but I suspect not much will now happen until we see how the crop has come through the winter. The total year exports are now expected to be in the region of 27-28 million tonnes, which is down from the 32-31 potential at the beginning of the year, which of course will add another 2 or 3 million tonnes to the carry-out stock at the end of the season. But the government intervention stocks are very modest, and despite rising the prices, they haven't attracted the grain, as the continued ruble devaluation has made grain domestically much higher in ruble terms. Export have, or had until the export controls came in, great benefit from obviously the weaker ruble, but domestic use has also increased at the same time. The government estimates that the increase in domestic feed consumption will eventually be 4 million tonnes. This is a major change in the market dynamics. The market does not just use export levels as the price setter. Apart from in the south, which of course benefits from geographical advantage, the domestic consumption has a greater influence on price than ever before. Prospects for the 2015 crop. Planted area for the winter wheat was up 12% at over 16 million hectares. But the very dry autumn and poor crop establishment has left it open to high winter kill. The normal average of 70% will be exceeded, and a smaller crop for next year is very likely. Exactly how small is difficult to say at this point, but possibly as low as 86 million tonnes, if the winter and spring are poor and the lack of soil moisture remains a concern. The flip side of the weak ruble supporting prices in the rise is the rise of the cost of new equipment, inputs, and borrowing, which all have a negative impact on Russian agriculture and will do for some time. Major influences for 2015 and 16. Obviously, the ruble exchange rate and oil price, the geopolitical situation and sanctions, export levy, will they be extended into the new crop? Will there be a ban? Winter wheat conditions, how much will the winter kill be? Of the crop that does survive, quite a bit of that might be weak from the very dry autumn. Planting intentions and the cost of production, cost of agricultural inputs, government intervention, stock level and price. This is my best guesstimate of supply and demand. I have to say it leans a little to the pessimistic side. So the winter kill could be higher than the international trade reflects at this moment. They seem to think that just because there aren't very cold conditions anymore, that everything's honky-dory. The next high-risk period of those crops coming out of dormancy in the spring. And the worst thing can happen, and it does occasionally happen, is that everything's fine, it warms up, and then you get a week of very cold weather just when the plants are very vulnerable. There's a good chance that certainly a part of the wheat loss will be replaced by increased spring barley plantings. But given the fact of the high cost of crop inputs, only fuel is marginally lower, the total area planted in Russia this year could fall, producing a crop, as they say, of 85, maybe 90 million tonnes. Barley production could well increase in Russia. It's probably the only crop to do so, as the growing costs are low compared to corn and sunflowers, and there is a chance to capture a malting premium, given a willingness from the brewing trade to support growers in what, as I'm sure we have already heard and will hear throughout this conference, are difficult times for the brewers and distillers. However, in Russia, in such uncertain times, it is difficult to predict what tomorrow will bring, let alone next year, and for sure, there will be many changes and economic challenges.